All right, let's dive into a real puzzle that's been fascinating both Wall Street traders and crypto investors, MicroStrategy, ticker symbol MSTR. This is a company that has completely hitched its wagon to Bitcoin, and in doing so, it's created one of the most talked about and honestly controversial valuation stories out there. Let's unpack it.
So here's the core of the paradox, the big question. At certain points, investors have been willing to pay a huge premium for MSTR stock. We're talking sometimes $2.50 for every single dollar of Bitcoin that the company actually holds. Now, on the surface, that sounds kind of crazy, right? So what is really going on here?
Okay, to really get what's happening, you got to understand one key term, the net asset value premium, or NAV premium. It's actually pretty simple. It's just the extra amount the market is willing to pay for a company over the actual value of all its stuff. And for MSTR, that stuff is mostly its gigantic pile of Bitcoin and its original software business.
So here's our game plan for this deep dive. First, we'll dig into the valuation paradox itself. Then we're going to deconstruct the four main things that create this premium. After that, we'll get into the really cool part, the mechanics of the Bitcoin flywheel that powers this whole thing. Then we'll look at leverage, which is a real double-edged sword here, and we'll wrap up by looking at the big choice every investor has to make.
So let's set the scene. You have to picture this. Back in August 2020, MicroStrategy was, for all intents and purposes, a pretty standard enterprise software company. But then its CEO, Michael Saylor, made a wild pivot. He decided to use the company's treasury to start buying Bitcoin, and buying it aggressively, basically transforming the company into what he now calls a Bitcoin development company.
And wow, did the market react. At its absolute peak, MSTR stock was trading at a mind-boggling 112% premium to the actual value of its assets. I mean, this wasn't just a little bit of optimism. This was the market screaming that MSTR was worth way more than the sum of its parts. The question is, why? To answer that, we've got to pull back the curtain and deconstruct that premium. See, analysts don't think it's just one thing. They believe it's a combination of four really powerful forces, all working together to justify this seemingly sky-high valuation. So what are these four drivers? Well, first, it's all about expectations for future Bitcoin buying. Second, it's the fact that a lot of investors just don't have many options to get Bitcoin exposure. Third is the company's pretty unique ability to use corporate leverage. And finally, you've got a wild, roaring speculative trading scene that's built up around the stock. All right, driver number one, future expectations. The market isn't just looking at the Bitcoin MSTR has today. No, it's pricing in all the Bitcoin it thinks MSTR is going to buy in the future. Investors are basically paying for a front-row seat to Michael Saylor's grand strategy, betting that the company's Bitcoin stash is just going to get bigger and bigger. Second, you've got what some people call a regulatory premium. Think about it. For a ton of big institutional funds, or even just regular folks with a 401k, buying actual Bitcoin is a huge headache, or sometimes just plain impossible. But MSTR? It's just a regular stock on the NASDAQ. It's an easy, regulated way to get that Bitcoin exposure right in your normal brokerage account, and sometimes it even comes with some nice tax perks. The third driver is all about corporate leverage, and this one is huge. Michael Saylor can do something you and I just can't. He can issue billions of dollars in special bonds at really low interest rates and use that cash to buy more Bitcoin. And here's the kicker. Unlike a regular trader using margin, MSTR can't get forced liquidated if the market crashes. So investors are willing to pay extra for that kind of tough, long-term leverage bet. And number four, good old-fashioned speculative frenzy. MSTR stock is incredibly volatile. We're talking roughly twice as volatile as Bitcoin itself. And that wild ride creates a perfect playground for traders. In fact, the options market for MSTR is just gigantic. At times, the amount of money at play there has been bigger than for behemoths like Google or Amazon. All that trading activity creates its own gravity, constantly pulling in more demand for the stock. Okay, so you've got these four drivers pushing up the price. But here's where it all comes together in a really clever way. They don't just exist on their own. They power this incredible mechanism that's become the engine of the whole strategy. It's called the Bitcoin Flywheel. So here's how this flywheel works. It's kind of like a four-step dance. Step 1, the stock is trading at that high premium we keep talking about. Step 2, because the stock is so expensive, MSTR can issue new shares and raise a bunch of cash. Step 3, they turn right around, boom, and use that cash to buy more Bitcoin.
And step 4, this is the magic. Because they use that expensive stock to buy the Bitcoin, the amount of Bitcoin backing every single share actually goes up. And that just justifies the premium all over again, which gets the whole cycle spinning faster.
Michael Saylor himself has a great name for it. He calls this whole thing a crypto reactor that can run for a long period of time. And when you see it in action, you can understand why. It's a self-feeding loop where the premium itself is the fuel.
So let that sink in for a second, because this is the key takeaway. Normally, when a company issues a ton of new shares, it's bad for existing shareholders. It waters down your ownership. You slice the pie, get smaller. But here, the opposite happens. This process is accretive. It creates what they call a positive Bitcoin yield. Even as they're printing more shares, your personal claim on the company's Bitcoin pile actually gets bigger. It's a seriously powerful reason for investors to want to keep that premium high.
But, and this is a really big but, this flywheel doesn't spin without some serious risk. The very same leverage that makes everything look amazing in a bull market can turn into an absolute monster when the market turns south. It is truly a double-edged sword.
Just to give you a sense of what we're talking about, look at the numbers. MSTR stock basically has a beta to Bitcoin of about 1.3 to 1.4. In plain English, that means for every 10% that Bitcoin moves, up or down, you can expect MSTR to move about 13 or 14% in the same direction. It is literally Bitcoin on steroids, engineered from the ground up to be more volatile.
So what keeps an MSTR investor up at night? Well, here are the big risks. First and foremost, a premium collapse. If investors lose faith and that premium disappears, the whole flywheel just grinds to a halt. Then there's dilution. If they issue shares when the premium isn't high enough, it just hurts shareholders. And of course, you're not just betting on Bitcoin, you're also betting on a company with debt, overhead, and all the usual corporate risks. Stuff you just don't have to worry about if you hold the coin yourself.
Okay, so this all brings it back to you, the investor. If you want Bitcoin exposure, what's the right way to get it? You've got some real choices to make, so let's compare the main options on the table.
This chart really lays out the trade-offs. It boils down to this. With MSTR, you get aggressive built-in leverage, but you have to accept the risk that the premium could collapse, plus all the corporate baggage. With a spot Bitcoin ETF, all those risks are gone, and it's super simple, but you get zero leverage. And finally, holding Bitcoin yourself gives you total control, but again, no leverage, and you're responsible for everything. They're all different tools for different jobs.
I heard a brilliant analogy that sums it all up. MicroStrategy is like a giant cargo ship. It has a very mechanical buying strategy. When it raises billions, it has to put that money to work. But you, the retail investor, you're a speedboat. You can be nimble, you can pick your entry points, you can wait for the perfect moment in a way that a massive corporation just can't.
And so we're left with the ultimate question. Is this MSTR flywheel a truly groundbreaking, perpetual value creation machine? A whole new way for companies to use their treasury? Or is it just a bull market phenomenon, a complex machine that's destined to slow down or maybe even go into reverse when the cycle inevitably turns? That's the billion-dollar question that MSTR investors are betting on every single day. Thanks for joining this explainer.